Welcome traders. This video analysis is going to review the pound dollar uptrend. How far can it go? Also the euro dollar, of course, dollar yen and AUD/USD will be reviewed. But first of all though, explaining that this material is intended for a global audience, please take into account that the info in this session may not be suitable for everyone. To get the corresponding info on charting conditions and other details, take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, your funds may be risked during trading. Please be aware of that and seek the advice of an independent financial advisor. Trading for exchange is considered very high risk. We thank you for your attention. So with that said, let's take a look at the educational webinars we have this week for free, of course, for you. And this is a great benefit, I do believe. So take a look here with weekly Forex recap on Monday. Tomorrow, Tuesday, the live trading lab, Camarilla trading, just like basically Wednesday as well. And Thursday, we're going to take a look at price action at support and resistance. Thursday, we're looking at strategies for Keltner and Bollinger. Hope to see you at one or all of these webinars. Let us start with the pound dollar. This is an hourly chart, and just to show you how strong the momentum was the last week and the week before that, in fact, probably. And you can see price accelerating to new highs. 170.40 has been a high for 5 to 6 years. So obviously this is a very key level that has been broken by about 20 pips. So it's not a full-fledged clear break, but obviously it shows the momentum trying to push through that resistance, a very strong resistance. And the question is, in my opinion, basically, if I look at this chart, is this basically the end of the fifth wave, I would say, if you use wave analysis, or is this just one of the five legs in the fifth wave? And that is, of course, very interesting. And the key level for that, in fact, is this 169.20. That's this bottom right in here. A break of that bottom would not necessarily turn the entire pair bearish, but it would put the bullish aspirations in the fridge. So anything above that, I still see as potentially bullish. I know that some traders were trying to short this particular zone right in here. I found that very risky because it looked like a wave 4 bull flag. This is looking like a chart pattern that is spelling more continuation, and that's indeed what happened. And this is one of the things we said in our live webinar, is look for the bounce at the 38.2 fib. That happened, although it missed the fib by about 10 pips probably, so that was a shame. But it was very close, as you can see, and the 38.2 bounce is doing very well. So that is the question, in my opinion. If price starts to accelerate above this top, there could be some potential for upside. Now, always be careful, of course, this is not necessarily the best moment to trade. I don't recommend that. But it does signal a potential for upside, and we're always waiting for some pullback, and a bounce confirmation via candlesticks is the preferred way. But these are my lines in the sand. Basically, this blue line, and if price can get maybe deeper to one of these fibs and bounce off that level, that's something that could be interesting. If price doesn't get that far, but starts breaking this top, I might change my view and not wait for this deeper pullback, but start looking for a pullback earlier after it breaks this top. So that's about it at the moment. If we zoom out to the 4-hour chart, you can see this could be a potential 5 wave as is. That's why it's good to be cautious at the moment, because we don't know if this is the completion of the 5 wave or not. But if it's only a wave 1, 2 of 5, then there could be a lot left. If this is indeed the 5th wave, then this could be the turning spot, in fact, roughly here for that downside, of which the blue line will be the confirmation. Eurodollar is basically in a triangle, looking at these orange lines. Personally, I have a bit more expectation of upside break than downside break, but I'm open to both and keeping an eye on both both sides, basically both trend lines. If we do break to the upside, then I would be looking for price to move to any of these fibs, basically, like the 38.2 fib, then up to the 50, then up to the 61.8, maybe even higher, right? So all these fibs could be resistances. If price does break to the downside, then we could maybe see a potential fall down to this minus 272 target. So I'm expecting an upside break because of the divergence between these bottoms, but obviously I'm waiting for price to confirm that break first, wait for price to break above this trend line, and then look for a hook back for that upside up to those fibs. The AUD/USD is definitely pushing higher and higher in a strong trend now at the moment to the upside. In fact, this downside momentum couldn't get any follow through, and you can see price bouncing off actually the bottom of this uptrend channel right here last week, and now getting follow through very early in the week already to the upside. So we're approaching basically these tops, so that's something to be aware of. But definitely looking like a triple bottom here. And although price is close to its resistances, it also broke out of this trend line. Therefore, it looks like a break, pull back, and go. The next target could be the 78.6 fib at 95.20. Next, the dollar yen is also in a triangle, just like the euro dollar, and here looking for a break as well. We can see that though the break might have some struggle because above it and below it are already support and resistance lines pretty close by. So this is not looking as appealing to me as the euro dollar. Dollar yen has been ranging very strongly already for several months, as we can see on this daily chart. So I'm not too particular fan of trading it either way. In that regard, a break of the horizontal green and red line here would probably be needed before I get more interest, because that would signal potential of a bigger breakout than just this small triangle on what we can see is best on the 4-hour chart. So the daily, I think, is the better guideline here, waiting for a break of that breakout consolidation zone here before price could maybe make a more trending mode either to the up or downside. Well, thank you so much for joining us in this video analysis. Hope to see you soon in one of our live webinars. Cheers.